Welcome to TheoTrade. This is Don Kaufman. It's July 18th, 2018. You are watching the Theo Night video. Well, I'll keep the synopsis of market action to a minimum today. Why? Well, really all that happened today is the financials, they ripped. Technology dipped. And that is it. Other than that, it has been a veritable slop fest in terms of everything from advanced decline line on down the line. If you looked at the advanced decline line, that's why I call it a veritable slop fest. We're a pure 50-50 out there. It is sloppy, but it's all right now. As I said in just the previous day's video, it's all about the financials. The financials are kind of the linchpin in the entire market right now, and you have to be very aware that the financials have been breaking to the upside. Now, even though the financials are breaking to the upside, if you look at them on a year-to-date percentage, they are now on the year. That's right, people. This is on the year. They are massively unchanged on the entire year. Again, that's to right now, all the way right back to the beginning of the year. So they're unchanged. But the reason I say the financials are the linchpin, financials get lit to the upside. If there's any buy-side activity that comes into the Nasdaq in just the days to come, you're going to get S&Ps, people, and they are going to take off. And therein lies where we could see action right up towards, the recent highs that were actually hit back in January kind of time frame. Now you will see a level specifically on my screen, and I want to take you into that level. It's 2841. Again, 2841. It's a major level, previously hit inside of the S&P futures. Nevertheless, as I said, very, very sloppy out there today. One of the things I've been talking about a lot is we come into earnings and earnings season, and by the time you watch this video, again, a bunch more earnings are going to be out there. So I figured I'd get a little bit ahead of the curve, and I'm going to discuss a bit about Microsoft. Now, Microsoft, if I go ahead and zoom in over here, of course, we're recording this on the 18th, and I want to give you time to think about a number of trades that you could do tomorrow on the 19th, because after the bell tomorrow will be Microsoft's earnings. Great. What could we do inside of Microsoft? Now, again, in some of the previous videos, specifically of Monday this week, we talked quite a bit about earnings and earnings-related trades. And one of the things we kind of elaborated upon is there's what can you really do? Well, you can kind of get bullish, all right? You can be the quintessential bear. You can get neutral, what we call short. What that means is you're selling premium in and around that expected move, or you can get neutral long. And that's it. People are like, well, I could sell the volatility. Okay, selling volatility is neutral short. But I could do a calendar spread. Yeah, that's still neutral short, right? I mean, it's all one of these four things. Well, I'm going to give you a little bit of a variation today. Now this is definitely qualifying under the bullish or bearish because, listen, a market, it is what it is. But we're going to look at the cusp of the expected move. And when I say the cusp of the expected move, let me really, again, kind of elaborate upon that for just a second. If you look at earnings as a standard deviation curve, all right, here's where the underlying currently is. Microsoft's trading 105. Beautiful. Let's call the expected move, we'll just call it plus or minus $4, right? Let's just round it. So expected move is equivalency to plus or minus $4. So we can go out and we could trade this thing. We could say, well, it could go up $4. So up $4 takes us about to what? 109-ish. Or we can go down $4, which takes us to 101. Now, with this, what we've seen is there are so many traders, involved in these marketplaces that we're actually being drawn to the edge, if you will, of what's expected, either to 109 or 101. Let me give you a specific example of just this going on. When I say we're drawn to the edge, let's take a look at Morgan Stanley. Now, Morgan Stanley, it had earnings, and it had earnings this morning. The earnings came out. First of all, it doesn't matter whether it's good, bad, or indifferent. That's not going to influence our trade. It's the move that matters. That's it. That's all that really matters is the move. In this particular case, the earnings came out, and the underlying moved up $1.38. All right. Well, the question was, what was expected? Not now. The earnings are already out. What was expected? as of yesterday at the close, what was expected? And the answer lies in, well, you can go to what's called Think Back. And what Think Back is specifically, this is a tool on the TD Ameritrade thinkorswim trading application. And Think Back, it's just end of day data. Like, this is nothing special, right? You can get this in a lot of different places, but this is end of day. It's from yesterday. And if you take a look specifically at Think Back, right there, well, we were expecting about a $1.40 move, okay? And that was equivalent to yesterday. And what do we get today? All right, and we're home. I mean, oh, I'm sorry. What? We're 2 pennies off? It is uncanny how that move ultimately happened. So we're going to apply this logic, if you will, to something like Microsoft. Now, what kinds of strategies could we use is what I term, all right, target practice. So here we are once again at 105. You can come up to 109. You can come down, for instance, to 101. First of all, which side do you want to pick? You don't have to do both sides, okay? What's the market been lately? If you're like, oh, the market's been really, really bullish lately, good. All we're going to do is take a shot, okay, at the 109 strike. When I say a shot, we're going to do what I would term a lower probability trade. And you're like, why a low probability trade? Because a low probability trade might have a massive, okay, payout. It's not so much like people get really infatuated with the idea of high probability. They're like, I want a 90% probability of success. Great, you got a 90% chance of success. Sell really far out of the money garbage, right? But 10% of the time, the wrath of the market comes back to haunt you. In this particular circumstance, I like to take a little bit of what I kind of call pot shots inside of something like Microsoft. It's a low probability trade, but it can have a massive payout if you're right. We want to go out there and we're going to do things like, you know, risk 1 to be able to make 4, risk 1 to be able to make 6. And that's exactly what we're going to do. What kind of strategy could we encompass? Butterflies. I mean, pretty, you know, straightforward for me. So I'm going to look at 2 different butterflies. I'm going to look at what's called the standard butterfly. Here's a standard butterfly, and I'm actually just going to show you the exact price, the exact strikes, save a little bit of time on this video. And, of course, you can freeze the video and take a look. This is the 107, 109, 111. It's a straight butterfly for about a 30-cent debit. You're like, oh, okay, so what can it make? What can it lose? You'll laugh, you'll cry. All right, so what can you actually make on a standard butterfly? First of all, forget this garbage. You're not going to make what it says over here. We live in a little world that we call reality. Okay, risk graph right there, that ain't reality. And again, I help build some of the thinkorswim tools, and I'm telling you that risk graph isn't reality. I think if you did 1 contract to this thing, you could realistically probably make somewhere around $100, but which you paid what? You know, that 30 cents kind of out front. You're not going to make the $200. I mean, really, realistically, you can make $100, and that's it. And that's not a bad you know, outcome by any stretch of the imagination. And that is literally what you will make. You know, that's, you know, including again the 30-cent debit in there. But your maximum sustained risk in the trade is right there. It's 30 cents. Can't lose more than the 30 cents. Yeah, you've got transaction costs. Target practice, people, target practice. If we hit anywhere in and around 109, you know, it's gold over there. And this is more what that risk graph is going to kind of look like as we come closer to it. Now, that's the standard butterfly. You want to get a little crazy, you want to get a little cheap up front, what I call cheap up front. This is a broken wing butterfly. Now, a broken wing butterfly, it's going to cost you less up front, but you're going to be embedding a lot of risk. Okay, and literally, like right there is Microsoft. Now, if Microsoft were to move all the way up, okay, to 114, that's a big boy move. Could it happen? Yeah, it could happen. Microsoft has been known to make those kind of moves, but it's a really, really low probability of that happening. In fact, the break-even point in this trade is somewhere just right around like 111. So if you think, all right, Microsoft could break to the upside, but as long as it's under 111, I'm fine. You can use the broken wing butterfly. The broken wing butterfly is going to tie up a little bit more margin, but it's only going to cost you 15 cents. And if Microsoft bombs, the most you can lose is 15 cents. That's it. You can't lose more than 15 cents. If Microsoft hits the the nail on the head, we'll probably move right around 109, and you'll come out again, and you'll make, this one's going to be a little bit more than 100. Why? Because you didn't pay the 30 cents necessarily up front. So it has nice ability. Now you can kind of select either or. Now this is for people, again, that are clearly bullish. Again, bullish on Microsoft. And of course, and inevitably somebody's going to ask me, well, could you do this on the bearish side? Sure, you could absolutely use put butterflies as well. But again, for the explanation today and to give you something that you're capable of trading, tomorrow or the next day, that's why we're kind of going through some of these examples specifically on Microsoft. Again, the expected moves, look at the efficiency in them. When I say look at the efficiency after the earnings announcement, all right? Look and see how far these underlyings are moving. They're literally being drawn right into the expected moves surrounding earnings. I want to thank everybody for joining us at TheoTrade. Have a wonderful evening, everybody. Bye-bye.